Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about GBP USD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong area of previous monthly support, which is now term resistance. All this zone is very strong historical structure. From here, multiple rejections to the upside were created every single time that the market tested this zone, including here. Then the market broke below the area and all that previous support was turned resistance. So if we will see, for example, another test of this resistance, there is a good probability to see another rejection to the downside, like the one that we are currently encountering with the creation of the current red candle of this month. Dropping down on the weekly, what do we see? Now, from a weekly perspective, we can see how already twice the market rejected that zone. Here, the first time, here, the second time, and at the moment it seems like once again we're heading towards the area and there is a good probability to see another rejection to the downside, at least a short-term rejection and reaction to that monthly resistance. Going down on the daily time frame, what do we have? Now, first of all, we can notice how we have an impulse and the start of a correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And in that case, what we can notice is that we have at 0.618 and 0.786 Fibonacci retracements lining up perfectly with previous daily support term resistance, creating confluence of resistance at this area that we could expect the market to test and then to reject to the downside. We can also notice how in a situation like this, where essentially we have the creation of a W, the first completion zone would be the neckline. In this case, since we have monthly resistance, there is a possibility also to break below it, but at least we should see the market here create the completion of the W at the neckline, so create a rejection to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the pound, what we can see is that with the last reports, net positions have overall been decreased. We went from minus 5k to minus 23k net positions, showing an increase of shorts from an institutional perspective from 40k to 58k, and longs got decreased from 43k to 34k. So the pound is getting weaker. Keep in mind that if we are checking the data for the pound, so the GBP, we are actually already checking GBP USD because all currencies on the spot are traded against the USD. So in a situation like this, if we will actually have the creation of this W formation, how we could be approaching a potential reversal lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal to the downside for the completion of this W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the CO2 data software, which is the one that we use precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials and you continue scrolling down, you will see that you have the possibility to join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, or at least go and check it out at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.